We're hearing from South Korean officials today that they're officially more or less confirming that there is a second wave in the country. How confident are you in Asian economies not facing further lockdowns and how this will affect the markets?
Two things. I mean, it's part of our base case scenario that you will. I mean, you have to expect more cases. Right? As you unlock, as long as there are still people, on this planet who have the virus. If you unlock, you would expect some contagion to happen. So this is not unusual, and they happen in pockets. However, again, from an economic or also profit point of view, then we have to bear in mind locking down an entire country. It pretty much doesn't matter where, costs you up to 3% of GDP per month. So even the richest nations on the planet cannot afford another 2-3 months complete lockdown. And this is really where it hits also the stock market. Right? So a complete lockdown is very, very unlikely in any of the economies. As a matter of fact, so the technique that has been applied, if you will, is local shutdowns and some of the measures becoming a bit stricter again. But that is very different from what we saw in April and May. And therefore, we think this has to be part. I mean, every investor needs to be prepared. Yes, of course, we knew this was going to happen, but it's not the same, economically speaking, in terms of loss. We have seen this is very unlikely to repeat in the strong format, and therefore, it doesn't mean you cannot have a positive view on the market.
Surely enough. Hartmut, very quickly, what's the call that you're taking on China? You're looking at select opportunities in China property. Where is it that you're looking at buying right now?
Yes, we have cut the overweight on China also, given that we wanted to take some profit. I mean, it has been a very well-performing market, very far advanced also in fighting COVID, etc. Many of the economic indicators are almost back to normal. So you would expect some rotation. We're starting to see this to happen. Some rotation outside. So in Asia, we lifted or upgraded, for example, Singapore and India. Now within China, and especially property, then I would also highlight the opportunity in Asian high yield, which is dominated by China property. But if you look at that asset class, still gives you quite a bit in excess of 7% in dollars. Probably not for too much longer, so it's very timely to go in there now.